rule of Ghana versus Murray, that is missing. The rule of Ghana versus Murray is supposed to be applicable.
Yeah.
So that if there is any partner who has a deficit, is supposed to be borne by the partners who are solvent. Then we're told to prepare the relevant accounts to record the dissolution. So here, the first thing is to transfer all the assets, to the realization account at the book value. Because we said the journal entry is debit realization, credit the specific asset. So you can see all the asset, freehold property, equipment, inventory, debtors. Then we have dissolution expenses of 1,000. They have already been included here. Then in terms of realization, we have been given the realization here. Freehold was 62,000. Equipment is 9,800, and inventory is 5,800. Then we have been told that the receivables paid the amount in full. So we need to know the figure for the debtors. So the figure for the debtors, you can see it was from here it was 9. Under the current asset, it was 9,000. So that 9,000 was paid in full. Inventory was realized at you can correct here, Bill.
Yeah.
This is 8,800 and not 5,800. So you can now see this is what was realized. Then this is the discount. This is the discount. Then from there you can now be able to determine the loss or the profit that was made on realization. So you'll find in this particular case that after the sharing, you can now be able to see there was a loss. And this loss was shared based on the profit and loss sharing ratio of 2:2:1. So out of this loss, partner X will be entitled to 12,000. So we have 12,000 for partner X. Partner Y, we have 12,000. And partner Z, we have 6,000. So that is now the loss that was made when these assets were being realized at the time of the dissolution of the partnership business. Then from there, you need to prepare the capital account. So you can now be able to see the opening balance for partner A, X, was 78,000. This is capital balances bill.
Yeah.
Y is 26,000 and Z is 4,000. Then the current account, partner X at 1,400. Partner Y at a deficit. That is why it is debited here.
Yeah.
That negative debit balance of 600. Then partner Z is 600, right?
Yeah.
So when you put that, you will find on the side of realization loss, partner X is sharing 12,000, partner Y is sharing 12,000, and partner Z is sharing 6,000. So at this particular point, when you look at the account for partner Z, the debit side is 6,000, and the credit side is 4,000.
Yeah.
It's 4,400. But you know, capital is supposed to be having a credit balance. But here you can see now we have a debit balance of 1,600.
Yeah.
And this partner Z has been declared insolvent. So this 1,600 is supposed to be shared based on the partner's capital ratio. So can you determine the ratio for the partner X and Y?
Yeah. This 39.
For partner,
The ratio is 39 to 13 to 2.
Are you sure, Bill? This partner is 78,000.
Yeah.
This is 78,000. X partner Y is 26,000. Right?
Yeah.
So this divide by 26, this is 1. Divide by 26, this will be.
Oh, for the 2. Actually, I was computing for the 3.
No, it is for the 2. You only deal with the solvent. The rule of Ghana versus Murray states that the solvent partners are supposed to share that deficit based on their capital ratio. So you can now see from here,
it is 3 to 2.
the capital ratio is 3:1, right?
Yeah.
So that is now the only new concept that we have introduced. And here, the deficit was of 1,600. You can see this amount there.
Yeah.
It was 1,600. So if we share this, X will be 3/4 times 1,600.
Comes to 1,200.
It will be 1,200. 1,100. Then partner Y will be entitled to a quarter of 1,600, which will give us 400. So you can now see this deficit has been shared.
Yeah.
Now X is 1,200. Y is 400. It's clear.
Yeah.
So that is the only new concept that we have introduced in the illustration that we had earlier, because there was no deficit and there was no application of the rule of Ghana versus Mori. So that is the only new concept that we introduced there. How you are supposed to share any partner with a deficit based on the rule of Ghana versus Mori. So after preparing, the total for this will be 79,400. Partner Y will be 26,000. And now this, after including the deficit, is 6,000. Then 79,400, 79,400 minus 12,000 minus 1,200 will give us 66,200. So this is what is supposed to be paid to partner X. This is the partner capital entitlement, right?
Yeah.
Then for partner Y, we have 26,000. Then out of these 26,000, you minus 12,000 minus 6,000, 600, sorry, minus 400. So it will give us the capital balance for this partner is 13,000, right?
Yeah.
So I hope you have understood.
Yeah.
So from there now, after preparing capital balances, you need now to prepare the cash book. So on the debit side of the cash book, you will have the assets which have been sold or realized. Then on the credit side, is for the payment based on the priority that we mentioned. So here we had the opening for cash, because you can see we have not realized cash, which was 4,200. Then we have equipment, 9,600. We had freehold 62. This one we need to confirm so that we are consistent. There is some parts appearing as 5,800.
We can convert it to 8,800.
Let's that will bring a challenge.
Yeah.
We'll confirm with the earlier whether it is correct. Can you first add this to this giving us 4,200? Yes, debit side plus 9,600 plus 62,000 plus 58,000 plus 9,000. So this will give us a total of 90. So this is correct, 90,600. So out of this, you need to pay the realization expense, the dissolution expenses of 1,600. So minus 1,600. Then from there, you need to pay the accounts receivable. Here we have deducted the discount.
Yeah.
So we minus 58. Then we have the loan from the bank of 3,000 that must be given priority. We have loan from partner Y of 7,000. So we remain with 73,000. 73,200. Then from here, partner A is entitled to capital balance of 60. It was 60 what? 66,200, right?
Yes. Yeah.
So minus 66,200. Then we minus 13,000 for partner X. Why? Sorry. So what are you getting, Bill?
Why is it more?
You are getting how much? What is the difference?
6,000.
There is a difference of 6,000.
Yeah, let me add again because mine is coming like there is a difference of. Yeah, there is a difference of 6,000.
6, eh?
Yeah.
I think let's capital account is okay. Let's let's look at the dissolution, the realization account here. We have freehold property 60,000, right?
Yeah.
Equipment
30,000.
Or you are able to check from the, or you're just checking from here?
I'm checking from here.
Okay. So we need to compare now with these figures.